All right, today we're going to pop the hood on the auto parts giant AutoZone. Their latest quarterly results just dropped, and honestly, they tell a pretty fascinating story. We're talking record-breaking growth, but it's happening right in the middle of some serious financial turbulence. So let's get into it. So the company's new CEO, Phil Daniel, he kicked off his report by really grounding everything in their core mission. He calls it Wow Customer Service. Now, it sounds simple, right? But believe me, it is the foundation for everything we're about to see in these numbers. Because, while that customer focus is the mission, the financial story, it's a lot more complicated. Yeah, they posted some really solid sales numbers, but behind the scenes, they were wrestling with some tricky financial headwinds. And they were doing all of this while launching their most aggressive expansion plan in over 2 decades. It's a lot to juggle. Okay, so first up, let's actually decode the numbers. Because on the surface, they might not look like much, but this is really a tale of 2 different ways to read the very same quarter. All right, now this is probably the most important thing to get your head around right from the start. See, last year's fourth quarter, it had an extra week in it. We're talking 17 weeks of sales versus this year's 16. And that little calendar quirk, it completely skews any direct, apples to apples comparison. So if you just look at that standard unadjusted number, the one you'll see in most headlines, it looks like sales barely grew at all, just 0.6%. But that figure is totally misleading because, again, it's comparing 16 weeks of business to 17. So once you adjust the numbers and make it a true apples-to-apples comparison, a much healthier picture starts to emerge. The real sales growth was actually 6.9%. And that changes the entire story. Okay, so sales are strong. We've established that. But the profitability story, well, it's got a few twists. Let's break down the financial pressures AutoZone is facing, because trust me, they had a really significant impact on the bottom line. The biggest single drag on their profit was this accounting term you might have heard of before, a LIFO charge. So what exactly is that? Okay, think of it like this. Imagine a shelf of parts in the stockroom. With LIFO, you basically assume you're selling the newest, most expensive part that just arrived, not the older, cheaper one that's been sitting in the back. Now, during times of inflation, with rising costs from things like tariffs, this makes your cost of goods sold look a lot higher. And what does that do? It reduces your reported profit, at least on paper. And look, this wasn't just some minor accounting detail. That LIFO charge, it was a massive, non-cash hit to their bottom line. We're talking about reducing their operating profit by $80 million in this quarter alone. That's huge. And on top of that, they were facing 2 other big pressures. First, a stronger US dollar meant their international sales were worth less when they converted them back, which created a $36 million headwind. And second, well, they're simply spending more on operating expenses to support all those new stores they're opening. But, those headwinds, they're really only half the story. Now let's look at the growth engines that are actually driving the company forward. Because under the surface, certain parts of this business are absolutely booming. Yeah, this chart really tells you everything you need to know. The traditional do-it-yourself segment, it grew a solid 2.2%. International was strong too at 7.2%. But the real story is over on the far left. Domestic commercial sales, that's sales to professional mechanics, surged an incredible 12.5%. I mean, that is the hyper-growth engine right now. And this isn't just some number on a page. It's a major strategic victory for them. See, the professional market means consistent, high-volume business. And AutoZone's big bet on serving that do-it-for-me crowd, well, it's clearly paying off in a huge way. So how are they fueling that massive commercial growth? Simple. By building. A lot. This last year, it actually marked a historic period of expansion for the company. In the full fiscal year, get this, they opened 304 net new stores. Now, to put that in perspective for you, that is the most stores they have opened in a single year since 1996. This is them betting big that the whole trend of repairing, not replacing, cars is here to stay. And this expansion? It really followed a clear 2-pronged approach. The majority of new stores, 195 of them, were right here in the US, strategically placed to better serve those professional customers we just talked about. But at the same time, they made a major international push, with almost 90 new locations in Mexico and another 20 down in Brazil. So, after a really complex quarter of strong growth and major expansion, what's next? Let's take a look at their game plan for the upcoming fiscal year. Their strategy for 2026 is pretty clear. They're going to double down on what's working. They plan to keep pushing that commercial business, maintain that momentum in Mexico and Brazil, and accelerate their store growth even more, especially with their larger hub and megahub formats that can stock way more parts. And, of course, it all comes back to that wow customer service. And they are putting a hard number on that ambition, too. The goal for next year? To open another 325 to 350 new stores. So yeah, they are not tapping the brakes on expansion at all. Which really brings us to the final critical question here. AutoZone is hitting the accelerator hard on its growth strategy. But at the exact same time, those headwinds we talked about, inflation, tariffs, rising costs, they're also gaining speed. So the key challenge for the year ahead, really the whole story, is going to be whether their powerful growth engine can actually outrace those mounting financial pressures.